Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. As the aftermath of rainy weather over the past 2 months comes to light, we're seeing a nice little move to the upside in the corn market. Corn over the last 5 trading days or so has moved up very nicely, and in doing so, we're seeing the market now approach resistance that we've talked about before. Up at about 343.5 or 343.25, we have reasonable resistance, and depending on how the market reacts from this area will determine what we should see over the next coming weeks. Part of why we're looking at this is the market now has entered into that time zone that we talked about, somewhere in the neighborhood between September 20th to September 22nd. In doing so, what we're looking at now is the potential for the market to move up into resistance and for a top to come in shortly thereafterwards. On the flip side, though, if the market's able to gain some good strength and continue to rally and break or close above 347.5, then continued strength up to about 366 is possible, yet we still believe that this is probably unlikely. We'll continue to monitor as the market continues to trade, and as the results of the harvest continues to come through, that's going to play a key role in helping us determine what direction the market really wants to go in. Today's move so far for the December corn contract is simply an inside bar, so today's range is strictly inside of yesterday's range. So breaking yesterday's low is going to be potentially a sell signal, and continued strength above is potential for a little bit more continued strength to the upside, although we continue to have resistance, as mentioned before, right up at about the 343 area. We're currently trading in between point of control zones. The one below is at 327.5, and the one directly above is at 379.25. And so until we reach perhaps either one of these standard deviation levels of the point of control, we'll probably seek stronger support or stronger resistance at either of those levels. Upon breaking one of those thresholds, then we can see continued strength. The March corn contract is trading similarly. We have resistance at 353. And here we can see the potential for a lower double top forming just below the previous bigger high that we saw several weeks ago. As the market comes in through here, depending on where it wants to go will help us. But of note, we can see the market is overbought. Last time it was overbought, we can see that the market had a nice little rundown. And so if it does the same thing again, we can potentially look for a nice little rundown again. And so for now, all the indications are pointing towards near-term resistance, but we're going to wait for confirmation before we go in. Last thing we'd like to point out is the notion of natural resistance that we have up above, which is this nice little orange line that we see kind of running in the market. So if the market comes in and touches near, very close to that area, this perhaps could be the area where we find our final top or final resistance point in conjunction with being overbought for a nice little leg to the downside. Similar to the December contract, we are right in between the 2 point of control levels. They sit at 370.75 and 342.5. And so right now, market's currently trading at 350, essentially right in between. And so until we get to one of those levels, we would be looking for good resistance or support first time it touches either one of those zones. Last week, we shared how the 53 number in the Fibonacci series may have contributed to the top that we saw in soybean when it approached the 988.25 number about a week and a half ago. We saw that number come in because the range it traveled was 53 cents. We took the liberties of actually measuring from the recent low up to the near-term high, and lo and behold, that 53 number shows up again, leads to what appears to be a very nice top because soybean has been down very strong today and is very close to breaking previous day's low, which would be a trigger for a potential sell opportunity. So as we look at this move here, we can continue to see how the Fibonacci series potentially plays a distinct role in helping us figure out key support and resistance levels in the markets that we choose to analyze. Here we're looking at soybean, and we have a potential for a lower double top, which means for potentially a very nice move to the downside. If this move is confirmed and we continue to see weakness, we'd be looking at a near-term target at a minimum of about 928, as we had discussed last week. So we'll continue to see what's going on. Market's currently trading at about 972. Break of yesterday's low probably puts us in a position where we can see a near-term target of about 928 at a minimum, and potentially going down to about 900. The point of control for this contract this week sits at 960 half. Currently we're at about 970 or so. So breaking below yesterday's low, additionally getting below that 960 half number would be very nice confirmation to the downside, as we would then have a close below the point of control, which indicates continued weakness to the downside to perhaps test the next level below is underway. The January beans contract is also moving very nicely inside of support and resistance. We've often called some of our lines a natural support resistance levels. And in essence, what it is a sinusoidal wave of sorts. So you can see the market came in and touched and found good support here, came in, touched across the top, found great resistance, came back and retested that sinusoidal line, found support again, and just recently yesterday made a top right up against it again, and would not be surprised for the market to come down and perhaps test support downside. Now, upon breaking this time, since we have essentially a three-leg move here, in all likelihood, a break to the downside would not find support here, although this would be a minimum price objective near the 945. Instead, what we would be looking for is for a move to come down to about 925 in the event that this downward move is confirmed and we see continued weakness. A downside support is potentially looking to form where we have volatility-based support underneath. And so coming into the 925 to 900 area is perhaps a very nice near-term target for this contract. The time factor that we had outlined for the January beans contract was September 21st. And as you can see, we had outlined this timeline with this arrow for several weeks now. And as this market has now come in, we're noticing that the market has a very nice big move to the downside today. We're in essence just simply waiting for continued confirmation to see if this leg to the downside is going to be a significant one or not. Wheat futures continues to move sideways to up, and it is now very close to near-term resistance at 413. Last time it came up to this area, the market reacted, but in essence, we've really seen quite the sideways consolidation over the past several weeks, which is part of what we had been talking about potentially happening before. Part of what we're looking at now is the market made a significant low, and over the last several days, you'll notice that the market over the last 7 to 8 trading days or so has only been able to recover about 38% of the move that it had done in the previous swing. Since then, it has dropped, and it's made a low near the 393 area or so, and has since bounced from there. And so what we're looking at is that the market is giving us now a series of higher lows potentially. And so closing above 413, even though we're overbought right now, would be potentially an indication that the market will have continued strength in a sideways to up movement. And what you're essentially looking at is the potential for an uptrend to start forming, although we don't want to put the cart before the horse. The main trend overall still continues to be down, given the nature of the strong downward move that we saw here. But again, cycles are also offsetting, telling us that we're in a position where the market may look to make a move to the upside through mid-November or so. As we analyze these markets, the stronger wheat gets, the higher the potential for a nice up move. And so we'll simply allow the price action to give us better direction. The timeline that we have on our radar for the December wheat contract is September 27th, which is next week on Tuesday. So in essence, what we're potentially looking at then is a continued upward movement through the 27th at a minimum. And there the market could potentially find resistance maybe in the neighborhood of 415 or so. So depending on how the market reacts as it approaches the September 27th timeline, it's going to give us better insight into whether or not this market really has enough legs to start to really move higher and to truly surprise and move into that mid-November timeline we've been discussing. Here we have the December crude oil contract, and in the past we've talked about the Fibonacci series playing a role in markets. If we take a look at the different swing counts, here on this big move on this swing, we're looking at 13 bars, which is our Fibonacci series 13 count. On the way back down, we saw 9 bars, which was just simply one more than the 8 count. On the way back up, we see a count of 5 bars, again, our Fibonacci time series. And the most recent swing to the downside, we're looking at 8 bars again, the same Fibonacci time series count. Sometimes we'll indicate in our analyses that the markets will look to have swings in corrections or in trends that last somewhere in the neighborhood of 5 to 8 bars, or 8 to 13 bars, or sometimes even 21 bars. Part of where these numbers come from is that natural series that runs through the markets and through nature. And that helps us understand the natural vibrations that run through the markets. In doing so, we spoke last week about a potential low coming in very close to the timeline that we're looking at right now. And we wanted for about 43 and change to hold, which is exactly what we're looking at right now with the key low, with the buyer's bar now transpiring today. If we have continued strength to the upside, we'd look at a minimum price objective to the upside that perhaps touches about 50.5. And even higher than that, the market could even go as high as 60. Again, it's very nice to see crude oil continuing to match up exactly with what we've been anticipating in many ways. We'll continue to watch the analyses here, but simply watching the key support resistance and the potential timelines for turning points based off of cycle dates are very helpful in helping us understand how the markets may make their moves. In closing, we'll take a look at the timeline or the timing angle trend line that we spoke of last week. We saw how we had very good resistance up against the market here. Previously, we had good support as it touched through here. It didn't hold very well here, and the market broke back down through here. But as we can see down below, we found good support up against that resistance. And once again, we found good support here for the market to make its way up. But as we're looking here, entering just past yesterday's high is potentially a solid entry point with the stop just below the market at about 43.5, with the minimum price objective once again near that 50 number. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.